Tesla just announced earnings and they shot down to $205 after the market closed. They're down about 7%. Now, I just want to give you a really quick and dirty reason why this is happening. So, first of all, they did shoot up after the market closed because of their earnings announcement. They beat on EPS. They beat what people were expecting, but there are some caveats to that. So they had EPS of $1.05. Now, that was versus $1.01 expected. That's a great beat. They had a little bit of a drop in revenue compared to what we were expecting. We got about $21.5 billion in total revenues versus about 22.1 expected. And the automotive gross margin, which is what a lot of investors look at, was still lower than expected. It was the same as last quarter when we had Shanghai shut down. Now, they do give an explanation for this, but as you can see, in Q1, we were up at 32.9%, and we haven't been able to get back up there. So the margin was much lower than expected. Now, they did come away with about $3.3 billion in free cash flow, which still is great. When you look at these numbers year over year, it's still fantastic, but they aren't as good as we were expecting. They have a $2.2 billion increase in cash and marketable securities. Some of that free cash flow did go back to pay down debt. They say the reason for the increase in revenue, which is 56% year over year, still, like I said, fantastic, is growth in vehicle deliveries, increased average selling price year over year. Remember, when they do increase the sales price of their vehicles, it does take a while to actually hit because they're in such a backlog. They don't charge until just a few days before you get your vehicle anyways. So when they increase the price, it doesn't really affect them until they make those vehicles. Growth in other parts of the business, negative FX impacts though, was a negative impact to revenue. You can see also profitability. They say there was an increased ASP, which helped them. Growth in vehicle deliveries helped them. Profit growth in other parts of the business helped them. However, higher raw material, commodity, logistics, warranty, and expedite costs. So that definitely hurt their profitability. Negative FX impact of $250 million. Now, they have a significant amount of their cash overseas, which obviously has been hurt because of the dollar going up so much. And I think this is the largest reason for their decrease in profitability versus what we were expecting. But I do want to thank moomoo. There's a link underneath the video where you can get up to 15 free stocks, up to $2,000 each. Definitely check out that link. Now, I think the main reason for them having lower margins is obviously the higher raw material, logistics, commodity, warranty, and expedite costs, but also cost of production ramp at Gigafactory Texas and Berlin and ramp of 4680 cells. This definitely hurt their margin here. Now, overall, I'm going to take a deeper look into this. We already know their production numbers. They're growing really quickly. They missed just by a little bit in terms of revenue, and they definitely have been affected by everything that we've seen in the commodity market. Now, some commodities are coming down. They still have great demand. They're still growing like crazy. And even though it crashed right after the market closed and after they announced, you can see that starting to return back up to that 215 level or so after falling down again to about 205, 206. Now, I think some people are realizing that this is a temporary setback. It's just a small miss on revenue, and they definitely could have just barely come in a little bit higher, and they still would have increased operating or automotive margins. I think, too, you have to realize that it's still so low in price compared to where we've been historically. We're around a 1.5 year low on Tesla stock. So them missing just slightly and still reporting great numbers. We're talking about 56% revenue growth. They're ramping up multiple facilities. They are putting money into new projects to get better growth in the future as well, big growth vectors. I think there's so many things that you have to account for in Tesla, and them just barely missing on revenue while they're so cheap, I don't think should cause the stock to crash that much more. Now, of course, if Elon goes and sells a bunch of stock, maybe we actually move up at that point. After he sells, obviously, during that, the stock would probably fall, but that would get rid of one of those gray clouds above Tesla holders where people are just worried that Elon's going to go dump billions of dollars. It's going to cause the stock price to crash even further, and then they can get in at a lower price. At least that's what some people think. So I think just getting through that, getting through this quarter, and showing this great growth, because we're still talking about huge growth in the fourth quarter. We're talking about 30, 40, 50, 60% growth in terms of deliveries, depending on what you believe. And that would be massive for the company. So let me know your thoughts about this underneath the video. Again, we're going to have to see what comes later from the earnings call, from what they're going to do with the extra cash. Are they going to start buying back shares? Why is Elon on the call? Because he said he would only be on important calls. So we'll be watching for that. If you want my information and if you want to know my thoughts in more real time, you can sign up for the Patreon underneath the video. Again, check out moomoo, and I'll see you in the next one. Bye.